The entire global stock market is looking weak. The financial stocks are bordering a bear market. They're looking like they need some QE from their central banks. The market is unable to sustain itself without easy money. So the question remains, who will come to the rescue this time? You came here for the truth, so let me unveil that for you. Today we're going to look at what has been happening. I want to focus on China, emerging markets, the US, and so much more. Let's begin by taking a look at this. Bloomberg World Stock Market Capitalization in the trillions of dollars. Since the end of January up until today, it has come down a total of $10 trillion. Now, these markets are gigantic, okay? So $10 trillion isn't the end of the world, but it's a significant amount because we're not just looking at a select handful of stocks. Of course, if you're on this channel, if you've been watching it for a while, you know the deal. We look globally. Anything could be triggered from any country at any time. We know that this method of globalization, which they have created, has actually made the world weak, very weak. In fact, it's fragile because a problem in one country instantly becomes a problem in another. You cannot affect one country without having the effect in the other. $10 trillion down in world stocks, but if I look around the world, it's hard to find any positive notes. If I take a select few stocks out of the tech sector in the US, I find positivity, and there are a couple others around the world, but in general, the market has head downward. And here we are in July at this time, and it has been since January, so we're talking basically about 6 months, where the market has been down. It's not something that we should necessarily be saying, oh, it's just a little blip. It's just a little bump in the road. It's been 6 months, okay? So let's look at this here. Painful half. Most assets have handed investors losses in the first 6 months of 2018. So you'll see that oil at the bottom there has definitely done well this year. It surprised a lot of people because it was down, it was subdued for an extended period of time. We saw it come down to about $30 a barrel, then it was sitting around $40 a barrel for this longest period here, and then 2018 it has really performed well. So anybody who was invested in that in 2018 has really done well. Compare that to emerging market stocks. You could see the weakness right here, or between that and the emerging market sovereigns. Basically a lot of Europe and Asia falls in the top negative returns throughout 2018. Okay, so that's where we'll be covering today, a lot of that. I'll show you this here. China's market has not done well. The Shanghai Composite, you can see the red line right after January. They all basically took a dip downward. They bounced back up, but for many of them, in this case here, you could see the direction that they've headed. They, at one point, came down 21%. I think there's been a little bit of a recovery on the way up here, but we can see it's still down from where it was in January. I mean, the global stock market at $10 trillion down, it's a significant amount. It really is. Okay, looking at this next chart, you could see German bank stocks closed to a 30-year low. Very, very significant. So we had this occur back around 2016, 2017. The same thing occurred during this time frame, financial crisis, and we also had it back in the late 80s. So we are going back in time here. German bank stocks, these companies, which, generally Germany is seen as bulletproof. They are just so strong. Nothing bad can ever happen. It's so fantastic in Germany. And then you get this, and it shows us a completely different picture. Obviously, Deutsche Bank being the primary one that's really been pulling this index down. But one stock isn't going to pull the entire index down. It weakens the rest of the stocks. It weakens the whole sector. And that spreads globally. It is globalization. Emerging markets down as well. Take a look at these three indexes and you will see we are on a decline. Now, Argentina, I've been covering this as I have with Venezuela. So Venezuela, I've been covering now for a few years. I've shown you when the inflation rate was under 100%. I've been documenting that here on the channel, going through practically, almost every week. I have some mention of it. And now we're in the territory of, I think it was 43,000% inflation. Okay, so I've been tracking that. I've also been doing the same thing with Argentina more recently. Their intervention has absolutely no validity. Their intervention makes it worse. I'm convinced, and I'll show you this here. This is the value of the Argentine peso versus the US dollar. You'll see where it is having declined. It's going towards 30. It will surpass that. It's going to get much, much worse. This has all been just in the past few months. You have to remember that. So we've gone from 20 to 30, a major devaluation versus the US dollar in just a couple months. Very significant. If you look at the intervention that's been done. Okay, so they got the biggest IMF bailout in history, right? So after declining, it comes down here. The IMF comes in and says, okay, we are going to fix this problem. We're going to bail them out. Have no fear. So it started to come up again. It started to do a little bit better. But it didn't take long for that roller coaster to head downhill. They intervened into the market over $1 billion worth, and it's still going to head down. $1 billion just in a short period of time. And previous to all of this, they've been doing that. They've been basically implementing these massive monetary measures, getting their reserves, throwing them in there, making it pump it up. It's not going to be a solution. It only makes matters worse. Look at this, how you can compare the different currencies out there. Look at what has done terrible this year. Argentina leading the pack, and that's been in such a short period of time too. It's actually something like I showed you Turkey beforehand. The lira was one of the worst, if not the worst, and then Argentina just came in and surpassed that. The Brazilian real, South Africa's not doing so good either. And that's another one there that we've seen the government has intervened into the markets and having very, very little effect. Of course, it doesn't have an effect. It is a big, big problem in order to try and get your market stable by monetary measures. No. You need to fix the problem. That's how you do it. If you can fix the problem, you will instill strength and security in your currency, in your stock market, in your stocks, whatever it is. Okay? But if you're just saying, oh, we're going to fix it by printing money, it doesn't work like that. It doesn't work. Or you have to print literally trillions and trillions of dollars. That would be another way. But look at what happened with the Fed, right? They printed up trillions of dollars, literally $16 trillion plus $4 trillion that they've admitted to, so that would be $20 trillion worth, and that was one central bank. So just imagine if all of them are printing trillions of dollars worth, what it took to keep the market alive. So we've got a very big problem today, and that is massive outflows that are occurring. You could see this with equities. Weekly net fund flows in the billions of dollars declining significantly here. It's actually the same level that we saw back towards this time frame where the market began its drop off. So we're back into that territory right here. That's quite significant as far as I'm concerned. Flows for the broad US asset classes, stocks and bonds. Taking a look at this, the blue is equities, and you'll see that drop off again. Just a significant amount, massive outflows that are occurring. And last but not least, weekly emerging market fund flows, again, declining as well. The market is selling off on this. They are reallocating their investments. I think that they are profit taking right now. There are fewer and fewer investments which are profiting during this time frame. So if you look at basically, let's just say from the beginning of February up until today, which stocks or which asset classes or sectors or whatever, which ones are benefiting at this time, and you have very, very few that have actually risen throughout these last few months. Obviously, we can look at FANG stocks and say that would be the best asset class to invest in right now. I'm not suggesting that, but if you look at the numbers, perhaps you would say that. There have been a couple others out there, but all I want to point out is the fact that there are fewer and fewer. There's a more narrowing band, and it's going to be a little bit of a difficulty to try and sort this all out as things get, people start to sell off, they start to take off the top. It's going to hurt. That's all for this video. If you found that informative, please give me a thumbs up. When you give me a thumbs up, guess what? It helps us support this channel, so I do appreciate that very much. Now, if you want the financial education you were not taught in schools, by the way, you were not taught in schools on purpose so that they can control you, so that they can manipulate you. You learn all the silliness throughout your educational time, no matter how long that was. You learn a whole bunch of things you probably never used for the average person, right? You don't learn the basics. You don't learn how to manage your money. That seems like a very, very simple thing. You could take the money that you earn at your 9-to-5 job and be able to protect it, be able to put it into a place that's, it's safe and everything. No, you take it to the bank and you trust the gentleman or the female there that's going to help you out. How do you just trust? I don't think that is necessarily a good idea. If you want these 2 books, they've got everything you need. All you got to do, go in the link in the description, flip through the books for yourself. Take care.